obviously, CPI, you saw it cool across the board in October, both on headline and on core. And to say the least, the market reaction has been pretty swift. Curious to hear your thoughts, though. When you think about what this means for the Fed, is it safe to say that we've seen the last Fed rate hike of this cycle?
First of all, I'll say I agree with almost everything Ken Griffin just said, except his comments about the Fed. For some time now, we've been saying that the Fed has overdone it and that the greater risk here is deflation. Yes, the CPI did not surprise us at all, although there were rumors that revisions would take it higher than many people thought. And so we believe we're beginning to see deflationary trends in many more sectors now. It started with commodities. Now we're seeing airline prices coming down, auto prices coming down, and we're seeing staples prices. They have been sticky, but what's happened to staples volumes? They have gone down. That's not how you run manufacturing plants. So we think that they will be forced into cutting prices as well. You heard Home Depot today, negative 3.8% comp store sales here in the United States. And if you look at the S&P 500, I think a third of all companies in the S&P 500 are reporting negative revenue growth. What we have characterized the last 2 years as a rolling recession. Some measures of housing are down 40%. That's a recession. Autos, 15 million units in the U.S., that's kind of punk. It's recession-like. And we're seeing these volume declines in staples. Right. You've got consumers pulling back. So I think the Fed's overdone it. I think we're going to see a lot more deflation going forward. We are going to hit that 2 handle, and we will go below it, and would not be surprised to see CPI inflation negative at some point next year.